Most lenders think their bottleneck is deal flow, but the truth is it's admin. Manual titles, broken workflows, and ops teams drowning in exceptions just to stay afloat. Today's guest is rebuilding the rails underneath all of it. Welcome to the Enhance AI Partners podcast, where we spotlight leaders re-engineering growth through people, process, and pragmatic AI. I'm Johan Mejia, founder of Enhance AI Partners. Today, I'm joined by John Mizzi, CEO of Vero Tech, a company rebuilding the operating system behind asset finance so lenders can scale without scaling headcount. John, thank you for joining. It's great to have you on.
Thanks for having me, Johan.
Now, all right, let's zoom out and talk about why admin work has quietly become one of the biggest drags on financial services. So let's define the pain. When you look across lenders, banks, captives, independents, what does admin work actually mean in the real world? And what does it look like, day to day?
Yeah, I mean, in so many different capacities, business is getting done over email and PDF attachments. And so that inevitably translates to folks having to manually key in loan details, manually upload documents to document management systems, duplication of data entry across multiple systems, having 5, 6, 10 different business applications that you're jumping into and out of every day in order to perform your role or function. And just keeping data up to date in so many different areas of a bank's business creates an immense amount of operational overhead. So what we really think about are how do we tie these systems together? How do we alleviate the need to jump into and out of so many different business applications? How do we reduce the possibility of fat fingering important details into a system by streamlining the way that information is entered, verified, and then accessed through the entire lending life cycle?
And where do you usually see the biggest hidden costs, being titles, onboarding, verification, or risk tracking?
Yeah. I think it's not top of mind, but it's around the risk and portfolio management functions, because without having data to drive business decisions, inevitably folks are using, and so they have mountains and mountains of data, but what they can actually synthesize into driving business decisions, or I should say the data that's actually organized in and utilized to drive business decisions, you might have a mountain of data, but you're looking at, an anthill to drive, where you're, where you should look next and how you should evaluate. So I think the lost value is around making decisions with a fraction of the information that you have in your
100%.
your databases.
And when lenders, don't fix this and just keep throwing people at the problem, what happens over the next 2 or 3 years? And what happens once, they start actually growing?
You have really bloated organizations. And I think the challenge is the more people you have doing things a certain way, the harder it is to ever get folks to change. So I think, frankly, I like to say our biggest competition is status quo. You have so many lenders or finance companies that have just thrown bodies at bottlenecks rather than think about why does this bottleneck exist and what is the technological solution for it, that creating the business case to change becomes difficult. You have a lot of technology issues. How do you figure out which one to prioritize? And that's where, I think we want to meet financial institutions where they're at. If they're not ready for a wholesale shift of their technologies, their tech stack, that's all right. We have certain point click solutions that solve a specific bottleneck for a specific business unit. Obviously, you unlock the most value by really thinking about a holistic solution, but we recognize that that's a big pill to swallow for a lot of organizations considering where they're at today.
Yeah, and considering, that a lot of these companies have done the same procedures for decades now, and they've been able to grow because, they've been doing good in business and et cetera. But as you said, once it gets to a point of, like big growth, how do you quality check that many people's work and ensure that everyone's having the right tools so that they can use their time appropriately. And you mentioned something very, very important right on the first question, where you mentioned how people should be able to look through data and take database decisions. Um, and, coming through data is difficult, but with solutions like yours, it makes part of that process easier where, a business owner can take data driven decisions in a more efficient way.
Yeah, that's where we really try to, I think if there's an element that very clearly that allows our prospective clients to very clearly recognize the value that we can deliver,
Hmm.
it's the analytics and the automated alerts that our system generates. And the reality is there are millions of data points that they can be looking at to understand what's going on. Inevitably, they revert to the most simplistic. What are payment trends, and are there units or vehicles, pieces of equipment that have gone missing and it can't be
Hmm.
verified? So those, great, they're definitely two very binary events that you can look at as far as risk. But there are so many other warning signs that if you harness that data effectively, you should be able to quickly identify before you have what is ultimately, an NSF transaction or missing
Hmm.
inventory, which are those are binary risk events, but that is at the very end of the credit deterioration process. What are some
Hmm.
of those early warning signs that you can catch 30, 60, 90 days before you get to that point that will allow you to mitigate your exposure, proactively address a deteriorating credit situation, and ultimately prevent losses, or even better, help a borrower turn things around before it turns into, a default situation. So what we really spend a lot of time thinking about are how do we take the data that we have, being the, operating system for our clients, and generate useful insights that we package up in a very digestible way so that they
Hmm.
can make decisions at the front end of that cycle rather than wait for a default event at the back end.
Which I imagine is a lot more expensive than, handling it in the beginning of the process
It's
rather than
like
the end.
healthcare.
Yeah.
Prevention is a lot more cost effective versus paying medical bills when you have to go to
A
the
hundred
hospital.
percent. 100%. Yeah, and I mean, we've learned to do it that way, where we wait until we get sick and then we go to the doctor and check what's up, instead of, preemptively doing things like exercising, eating well, etc. That could
You
be
got to get your
compared to,
annual physical and get those early warning signs from your blood
yeah,
tests. It's a lot easier to nip it in the bud then versus wait for a heart attack.
100%. Now, so, admin becomes this invisible tax on growth, which sets up the story of Vero, because you didn't just automate tasks, but you approached the problem differently from the start. So, when someone asks you what Vero actually does, beyond the headline, how do you explain it?
We like to, depending on who we're talking to, inevitably, there's different elements of what we do that we like to highlight. There's different applications that we support for a person coming from the risk organization relative to credit or account management or portfolio management. And
Mhm.
so at the end of the day, I like to say that we have the orchestration layer, or the operating system that supports a lender's business across every functional area that they need to support. And so, what does that mean? Everyone's familiar with Salesforce. Salesforce is
Mhm.
like the end all be all within, a large enterprise. And, what I think makes it so effective is that it's highly configurable, highly flexible to be,
Mhm.
adjusted to support the lender's operations no matter where they're at. And we like to think that we've built that system, albeit we save our clients the headache of having to build something and configure it from the ground up because we deliver it as a SaaS solution. Now,
Mhm.
we aren't the end all be all for all financial services companies. We are the end all be all for anyone who does floor plan financing, which is a very specialized niche in the asset finance world. And I think
Mhm.
that's the unique or differentiated point is we go super deep for a very narrow population of financial institutions. And that's what allows us to be successful here.
That's amazing. And what was the initial spark, the moment you realized the existing lending infrastructure was broken or needed some help?
Yeah, I was working at another fintech. We were implementing our systems at a client who was doing floor plan lending.
Mm.
And I was just, it was kind of one of those, you want to bang your head against the wall and be like, how are these guys successful doing things this way? There was spreadsheets everywhere, an accounting system that was being used for a lot more than it should have been used for. Like I said, they were waiting for their borrowers to default. And if the borrower was making payments, they didn't know any better as far as whether it was a solid business or if the business was heading the wrong direction, or if maybe there was an opportunity to deepen the relationship with their borrower. And
Mhm.
so we looked across the street at what larger lenders were doing in this market and found everyone was using a pretty similar playbook. And that was simply because it's not the sexiest niche in financial services or in asset backed lending. It was a niche that had been what we believed underinvested in for the prior
Mm.
decade before we got into the business. And we saw an opportunity. I'm not really a product guy, so I was surprised that this was the best idea that, me and my co-founder could come up with at the time. But I think there's something to be said about going after unsexy niches that are underinvested in, and that it's a lot easier to make a business case to, be transformative in a market that's a little bit unsexy, maybe, than going after a crowded market that's super sexy and gets all the VC headlines.
100%. And you get 100 options too on which product or service to use. And early on, what was the alternative approach you took to get Vero off the ground before everything was what you
Yeah.
consider, perfect?
I was the first employee at a fintech, and we the leadership team there took the approach of really iterating or driving a product roadmap through sales cycles. We didn't
Mm.
really have in-house experts in the industry that we were going after supporting. And so while we probably had a lot of novel ideas in terms of how things should work,
Hmm.
we weren't necessarily building out tools with the right integrations and the right infrastructure to accommodate the market with where it was at. And so there was just gaps in our product that we only uncovered as we were selling. And
I
so
see.
the feedback loop was too slow in terms of what insights we were able to relay to our product team. So
Hmm.
with Vero, it was really important to me that we have a design partner who we could support and get cash running through the pipes of our system as quickly as possible. Rather than working with a legacy lender in our market, we ended up starting our own. So for
Oh,
three
that's
and a
amazing.
half years, we ran a finance company and were eating our own dog food. And that
Hmm.
we had 20 folks who were operating that business and using the Vero technology platform to manage their day-to-day job responsibilities across credit and underwriting, dealer onboarding, account management, customer success, portfolio management, risk, audit, titles. And that really allowed us to have the tightest imaginable feedback loop in terms of driving our product roadmap and making sure that the tools and systems and functions that we were developing not just worked the way that they were supposed to, but
Hmm.
how could we go a step further and really think about what is the best way for us to automate this process? What is the best way to go a step further and develop, risk analytics that we wouldn't have known of had we not, gotten punched in the face a few times. We had a few dealers who defaulted.
Hmm.
When a borrower, you know, goes belly up and can't pay you back the money that you've lent them, you look in the mirror and you get really thoughtful around how can we make sure that never happens again. And so that drove some of our best ideas in terms of what are the functions and features that we needed to develop in order to prevent some of these risk situations from evolving into what they became.
I mean, I think for our listeners, that's a lesson learned from, how a founder like yourself is learning from your own mistakes and the company's mistakes. And you've seen these mistakes as growth opportunities and opportunities to improve what you're already offering. So, I mean, that's a big lesson here.
Absolutely.
Now, and this is a two-part question. Once a lender adopts Vero OS end to end, what actually changes in their day-to-day workflow? And then second part of the question is what operational shifts make 30% growth on portfolios possible?
Yeah. I mean, perfect example. We just went live with a client who they had a loan management system, which handles
Mhm.
all the, accounting, transaction processing, system of record, GL functionality. They were using Power BI to handle some reporting. They were
Mhm.
using HubSpot as a CRM. They had to, manually log into the credit bureaus to pull credit reports, borrowers. They were manually downloading and uploading ACH files to their bank every day. They had a
Mhm.
whole separate finance function who was manually reconciling data between loan management system, bank, reporting systems. They needed a lot of IT resources to just keep everything flowing across all these different
Mhm.
applications. And so by implementing Vero, Power BI went away. They no longer needed to manually download and upload things into their bank. The reconciliation reporting was the timeline to handle that function was reduced by 60%.
Oh
Um,
wow.
so we end up being able to help our clients consolidate the number of applications that they need to use.
Mhm.
We end up being able to, think about straight through processing of transactions rather than getting an email, manually keying in loan data in system one, manually uploading PDF files of titles and bills of sale and invoices into a different system, having to make sure that everything's, lined up and every box gets checked. All of that is system oriented where the the OEM is we're integrated with the OEMs who are submitting bulk files of asset data that we can use for approving and the funding workflow. We're getting a bulk upload of all of the invoices that we can match with the asset records and update the statuses on. We can make the whole manual document management concept is completely eliminated. We have one group that we're trying to get a deal done with who has 15 people whose job is managing physical title documents.
Oh my goodness.
Our hope is that number drops to about 3 by the time they're done
Mhm.
implementing systems. So there's just massive efficiencies to be had when you think about the volume of documents and data that need to be entered into a system. And if
Mhm.
we can simply have that all be uploaded once, ideally on an automated basis, a lot of this work just simply disappears.
Yeah. I mean, and you mentioned this earlier too, avoiding errors. Because it's so easy if I'm manually typing numbers, it's so easy for an extra zero to go in or or going
It's
into the wrong
mind
line
numbing.
or whatever.
We have clients across the finance institutions that we support fund autos, equipment, power
Mhm.
sports, RVs. Most of those assets have VIN numbers. If your car
Mhm.
has a VIN on it, it's a 17-digit alphanumeric combination that needs to get manually keyed in. That is mind numbing to look at. Okay, I got to look at the title. I need to make sure those 17 characters are manually keyed into my loan management system. Why are people doing that? It's error prone, risky business to manually key that stuff in. And if you have to spend 10 seconds doing it, that's 10 seconds too much.
And I mean, if you have 100,000 files to go through, I mean, it'll take you
A
weeks
lot
and
of
days.
time.
Now, building something new is part of the challenge, but convincing conservative institutions to change how they operate, is another big challenge. So, what makes financial institutions so hesitant to invest, in new systems, even when the old ones clearly hold them back or.
There's something to be said about a leader of a financial institution who's grinded it out for 20 or 30 years to get to the role that they're in. And they know where all
Mm,
the skeletons are in the closet, and they know the ins and outs of exactly how every one of their operational functions works. And they know that all of their lieutenants have their arms wrapped around their respective responsibilities. And so when you implement a system like ours, there's a certain amount of change management that needs to be effectively executed upon in order to really realize the benefits of the new technology system. That's scary. I get it. You have to really create a very solid business case to drive that type of change. And then you have to
Mhm.
make sure you have resources to successfully facilitate that change. And so it's not just the opportunity that you can put in front of them around how much efficiency and cost savings we can deliver, but you have to make sure. And we at the beginning of every engagement, before we close the deal, we make sure that they have resources they can allocate to this transformation project, because otherwise it's not going to be successful. And the worst thing we can do is spend 6 months implementing our system somewhere for them to struggle with adoption, or for us to go live and then for there to be all of these folks with their hair on fire because they didn't take the training seriously or they didn't do the
Mhm.
testing sufficiently. And so we really impress upon our clients the need to support the process, and allocate resources and make sure that there are internal champions who are going to really invest time into mastering our system
Mhm.
and then connecting the dots of here's where we're at today and here's where we're going to be once we go live with Vero, and here's the process updates that we need to make to get there.
Now, can you share a story, no names, of a lender who resisted change for years before finally moving over to you guys?
Yeah. One of the clients we just brought on board this year was someone who we went through a sales exercise with them in 2022. And then,
Oh, wow.
2023 hit. It was a rough year for banks. A lot of folks had budget
Mhm.
freezes. Obviously not a great interest rate environment. And then it took, some periodic updates, but frankly, a leadership change at the top of the house to finally re-engage. And the interim leader who took over responsibilities as they were finding a replacement recognized just how many skeletons there were in that closet and how much dirt
Mhm.
had gotten swept under the rug. And so sometimes it's just the prerogative of a leader in these organizations where they're happy with status quo, like I said.
Yeah.
And we are going to be patient and hang in there and be in the wings so that if and when there is an opportunity, folks know where to find us. And we don't expect to close every deal, at least not on the first go around. But my hope is that, the larger our book of clients grows, the more success stories that we can tell,
Yeah.
and the more folks that, given that it is a niche industry, there's a lot of folks that jump into different organizations and ideally bring some good ideas that we've shared or good experiences that we've provided them, and that can drive growth for us.
I mean, that's congrats on getting that client back after 3 years of. And if they stay on legacy systems, what do you see happen first? Margin pressure, compliance risk, or just lost in competitiveness?
I think I'll be able to answer that question 5 years from now more effectively than I can today.
Mhm.
But my view is in the next 5 years, there are a lot of organizations who have folks that are going to be seasoning out of their roles. They're going to retire. And I think it's a heck of a lot harder today to find someone who's excited about entering data and filing documents, because that's just
Mhm.
not the world that we live in. Everyone expects there to be a technology solution to handle that type of stuff.
Mhm.
So, my prediction is that the folks that continue doing things the way they're doing them today, if they are manually keying in loan data, I think they're going to be struggling to simply support their existing businesses because that's how things got done in 2005. That doesn't mean how they need to get done in 2025.
Yeah, and I think that's one phrase that we both hear a lot. Like, why change what I'm doing if it's worked so far? Why would I change and invest in something that, in their eyes, might not work? But you and I both have the numbers to back that up, knowing that these types of automations and help actually do help.
If you're
And
waiting for your system to break before you make a change,
yeah, it's too late.
you're going to find yourself going through a really painful 6 to 12 month cycle.
Now, once a lender pushes through that initial pain, the question becomes, how do you keep evolving instead of freezing again? So looking out into the future view, in the next 5 or 10 years out, what does a modern asset finance operation actually look like?
Yeah, this gets interesting. I think we are obviously everyone thinks about AI. I think there are AI applications that are going to be able to take on a lot of the responsibility. I think there's going to be agents that verify documents and data and reconcile transactions, and a lot of that manual work or it just goes away. But I think the organizations that master the ongoing investment in technology and find the right vendors to partner with are able to stay at the front of that curve more effectively. They're able to go after more opportunities. We operate in a very fragmented market, and I think those that will gain market share are the ones that are going to have systems that allow them to be more nimble,
Hmm.
and go after emerging niche opportunities that turn into big market growth drivers. At the same time, they're going to be able to operate with less overhead and less
Hmm.
people. And I think inevitably, as you grow and scale, yes, you need more people, but having people that are focusing on value add, you know,
Exactly.
client relationships, sales, looking at the data or taking the insights that our system provides and making decisions rather than entering data and reconciling data and manually creating reporting. We met with a bank last year who they have a VP level operator who's been with the bank for 20 years, whose primary job is simply making sure that the management reporting that gets produced is accurate. Multi-billion dollar portfolio.
Hmm.
And my view is that guy is way too smart. His efforts are wasted doing that. He should
100%.
be reviewing the reports, identifying pulling out the insights from the data, developing, suggestions on what the business needs to be doing differently rather than living in the weeds reconciling a bunch of Excel
Hmm.
spreadsheets.
And where do you think automation or AI create the biggest lift in, first being risk documented document processing or exception handling?
I think there's kind of three buckets.
Hmm.
I think every organization has a slightly different, you know, standard operating procedure. And there's a lot of institutional knowledge in terms of I'm looking at something I could go down this path or I could go down that path. And, once I choose a path, then there's five other, forks in the road that I need to navigate. And so I
Hmm.
think agents provide the opportunity to share that institutional knowledge more effectively so that folks have a sounding board or they can get guidance and support without necessarily having to wait for their one-on-one with the manager or picking up the phone and calling someone.
Hmm.
Given the breadth of data that is accessible, synthesizing it all and coming up with an assessment of what's going on using the broadest swath of data is inevitably becomes increasingly difficult. I think agents stand to be able to synthesize that growing magnitude of data and harvest insights in a way that a human just doesn't have the time to do. And so having risk analysis that is based on a broader data set, again, I think agents stand to be highly impactful in that. And finally, I think there's just, again, at some point, someone needs to make sure that the data from the invoice lines up with the data in the loan management system and the information that you're gathering, whether it be from a website, dealer docs, the DMV data, title and registrations, whatever. So being able to, and a lot of this, maybe it's not AI, it's machine learning, but being
Hmm.
able to reconcile data from structured documents, unstructured documents, in banking, there's a lot of details that need to be verified. And so again, I think AI applications stand to streamline a lot of that and reduce the risk of, humans missing something.
And you mentioned something that we like to highlight as well, where you said how AI and the systems will help businesses take better decisions and particularly spend their time on activities that will produce revenue or will increase client satisfaction or will create better business decisions, but instead of doing the busy work, which is what a lot of people are actually doing. So I think that that's a perfect way of putting it. And that's the last question for a segment. How do you build a culture of constant iteration in a regulated industry where change is uncomfortable?
Slow, incremental progress. We don't need to go from the Stone Ages to, the .com era overnight. Let's get to
Mhm.
the Bronze era first. So that's where we like to, our platform has a variety of different modules. We like to take a phased approach as we're implementing our systems. We want to
Mhm.
focus on getting a solid core in place first, and then layering on additional, not complexity, but additional functionality over time so that people aren't totally mind boggled day one when we go live.
All right. So let's wrap this up with a quick lightning round.
Sounds good.
What's the biggest myth about admin work in financial services?
That manually reviewing details and documents is the most effective way to get stuff done.
The second one, what's the most underrated operation or role inside a lender?
Underrated. I think the frontline risk folks, they have the hardest job. They catch all the blame when shit goes wrong, but it's a thankless role because everyone just wants things to be going right. Um,
Mm-hmm.
and they don't necessarily get credit when they do. So I feel for those frontline risk folks.
What's one principle you use to decide when to evolve or versus when to hold steady?
As far as when to evolve, I think it's really a matter of, is there a solid business case to pursue a new opportunity? Is there a solid business case for us to start investing in AI applications today? 6 months ago, I would have said no.
Yeah.
Um, my mind shifted. There
Mm-hmm.
was for a variety of reasons, the business case to make these investments became a lot clearer. The decision to move away from our financing business, that was an evolution for us. And it was something that we didn't decide upon overnight. So I think, it's kind of like that thinking fast and slow concept, but
Yeah.
some of the decisions that you have to make shouldn't be things that you just have one meeting and make a decision on. As a
Mm-hmm.
startup, you have to make a lot of decisions quickly, but certain decisions you should not.
And last question, a book that you would recommend to founders, going through the whole craziness of a startup.
Right. By Angela Duckworth.
Because I know you mentioned the Thinking Fast and Slow. That's one of the few books I've read multiple times.
Yep. That's another.
And every time you read it, you find something new, and I find it amazing. Now, John, thank you again for joining. This was excellent. There's three things that stood out during our conversation. The first one was admin isn't back office noise. It's a structural tax on growth, risk, and customer experience. Two, the lenders who win are the ones willing to absorb short-term pain to build long-term operating leverage. And then three, the future of asset finance belongs to teams that constantly evolve, not once, but continuously. So thanks for walking us through how Vero is pushing the industry forward. Now, for everyone listening, no, sorry, for anyone who wants to reach out to you, where should they go first?
LinkedIn's great. Its company website works as well.
Perfect. So we'll add those two on the show notes below.
My
John, thanks
email
again
is,
for.
I think you might need my email for LinkedIn, which is john@vero-technologies.com.
Perfect. So I'll make sure to add those on the show notes below. And John, we want to thank you again for joining. And for everyone listening, if this episode gave you clarity on the hidden costs of admin, share it with someone on your ops or risk team. Thank you again, John. See you
Thanks
on
for
the
having
next
me
one.
on.